Hello, welcome to Macro Point of View 5 Mins Commodities, and today we're gonna take another look on gold because, well, on 11th of February we had reached the all-time highs on gold and now we are retracing. And what is going on? What will happen? We are slightly after CPI in the United States, so it's very valid at the moment how the situation on gold is gonna look. So do not waste time, let's take a look on this 5 minutes commodities on gold today. So as we can see, the gold is retrieving second day in a row, but please take a look on a wider situation. The CPI is getting higher than expected because probably we have some kind of panic buyouts from the companies and rising prices slightly due to some tariffs that was announced by Donald Trump. So if they're gonna rise the price earlier, it's gonna be less hit if they have to bring the goods from abroad with new tariffs. So for now, it's their profit, then they can less raise the prices than it should be. But as you can see on this market, we have mostly rising market since all of January and those first 10 sessions of February. So we have a lot of movement to be checking down and to be taken profit from investors. So what I can see here is that we are quite close. I was expecting to be a bit closer to $3,000 and I was planning to do this today's 5 minutes commodities showing and saying that we might reach near $3,000 and drop about $5 maybe $7 before it, because it will be very good to take profit and kick some price back on very tight stop losses near 3,000, and then it's gonna be a good place to buy back and return above 3,000. But at the moment I'm not sure when it's gonna happen. I was expecting 3,000 even here in February, but now because we've got higher CPI, both core and normal CPI, and it's after Jerome Powell saying that they're gonna take a closer look on the market situation and economy, macroeconomy in the United States and unemployment, and all those numbers looks quite good. So it's saying that probably we won't have too much cutting rates in the United States. So it's bad for the gold. Yet I think the unexpectancy in Donald Trump economy should be the main factor for the gold for next week, especially that at the moment we have very tight situation in Middle East, especially that Israel received kind of permission from Donald Trump to break the ceasefire, and if there will be no release of hostages by Hamas on Saturday. So we are in the middle of, I'm not even sure how to say it, because it's a quite dangerous situation to escalate quickly in Middle East, even if we don't say anything about relocating the Palestinians from Gaza, which was one of the Trump's ideas. Of course, situations that we had a member of Donald Trump administration visiting Russia, we've got a member of Donald Trump administration visiting Ukraine. It's also a peaceful factor because there was probably some kind of action to stop the war on Ukraine. So here we might expecting some kind of profit taking at the moment, but I think we should be expecting to rise into the 3,000. If we get under $2,850 per ounce, it will be good to sit in this train, but I don't think we should be expecting to get much more. I will move this to here, this top price level on the 30th of October last year, and as you can see, it's serving here as a support for those price movement on the end of the January and first trading day in February. So I think it's a good level. So as you can see, I'm still bullish for the gold, but I expecting it might be some kind of reducing the price. So just be careful and stay tuned for next 5 minutes commodities on Macro Point of View.